Hey there, this is Brian here from quantlabs.net. I'm going to show you the portfolio optimization tool, which is probably going to be one of my more favorite tools that I'd be using for optimizing a portfolio. So this tool pretty well encompasses all the things you'd want. I've looked for the source code on MathWorks because this is from a 4-year-old webinar, and it seems that MathWorks decided to pull this code down from MathWorks Central or MATLAB Central. So I will post it for my members. Other than that, we'll see what we can do because I don't want to step outside of anything I shouldn't be posting. Anyways, here's the tool, and what we do is we just run it. So what does it? The only one I really care about is this Excel, how you can use as a data source. I'm going to load in this test XLS spreadsheet. This one, I believe. We import the data. There we go. We accept the data. Okay. So now we get our returns. These are all the available assets that are in the map file. So these are our returns, annualized return volume percentages for these assets. Of course, these are the portfolio returns, I believe. So we can get logarithmic, exponential, whatever, but we'll just use the default. So now what we're going to do is we're going to calculate the efficient frontier. Of course, we can deselect any of the assets we don't want. So here's our portfolio optimization. Now the interesting thing, these are the final results, is if we click on any of these points, we can get a allocation of our portfolio here. Portfolio weights, what it should be based upon this efficient frontier. And these in red, of course, are individual assets. These are the annualized return and the risk as well on the that's a percentage. So using this particular point, we get our metrics and performance, as well as we get our value at risk. Of course, we can change that. We talked about value at risk in the past as part of money management, or sorry, risk management. So I'm not going to focus on that. It's a pretty popular topic to understand. And then of course we have our key metrics as well. Volatility, return, Sharpe ratio, max drawdown. So let's say we have lower risk, P&G, our Sharpe ratio is still negative. Max drawdown is not as much. So volatility is fairly low. Let's just try this one. So it's saying to focus mostly on Tesla and SIM. I don't even know what the SIM is. But here's a performance, value at risk, and let's see. Our Sharpe ratio is the best it looks like, but our volatility is pretty high, and of course our max drawdown is pretty high as well. So our return is at 61%, but let's see if at the other end how it does. So we'll just use this. Annualized return at 13. Sorry, the volatility at 13%, return 16, and drawdown still at 8.3. So it's probably a better way if you're still going to get a good return. So hopefully that's cool. And we'll leave it at that. Just wanted to show you the script. It's quite useful. It encompasses all the performance metrics you'd want in portfolio optimization, as well as your position weighting on your assets as well, the returns as well. Hopefully I'll help you out.